Going to give you a quick rundown on two trades I took today. One was a long, one was a short, one loser, and one was a winner. So we're going to go over the one I took for my long today in the morning. So let's get to it. I'm going to clear out my chart. So let's start off with the higher time frame as always. New month, July. Let's drop down to the weekly. Weekly time frame, we have the weekly open. We were below the weekly opening price. We have not taken the previous week high or the previous week low. So we're still within the weekly candles range. Here on the daily time frame, yesterday objective was for us to look for this down close candle for us to trade into it right here. Successfully traded into it. Now following the next day, we have previous day high and previous day low. We now have taken neither of these two as well on the daily. So let's drop down to an even lower time frame. So my first mistake for this long was focusing on the hourly charts. So weekly didn't provide me anything to go long. Daily didn't provide me anything to go long. So this is already telling me that longs really aren't making sense. But as I drop down to the lower time frame, what did I see? So if we draw the dealing range from this low to this high, you can see how price retraced down lower into this gap right here. So from this gap, this is where I framed my narrative for longs. Now, what is the aligned time frame for the 4 hour? It's the 15 minute. So if we drop down to the 15-minute time frame, what do we see? Well, we see these nice highs above right here, right? I like this. This is where previous daily high aligns with. Now, we know previous daily high is above here. What do we have right here? So we get our change in the state. Let's mark it out blue. Get our change in the state of delivery. Get this low that we swept. From this tells me that we're in a higher probability market condition to go long due to us trading into a discount, trading into this higher time frame POI and having that lower time frame confirmation. So we're in this 15-minute market maker buy model, right? Is it invalidated? No, it's not invalidated, but we did get stopped out on the longs that we took. So let's see if I can go back to the chart replay. We were into 9:15 to 9:30, so around right here. Okay, so previous day highs above, we have these two down close candles. So let's zoom in on here. So I was looking for a closure, a strong closure above these two consecutive down close candles. We swept this low. And then we were having that close above this down close. So this is what I was looking for to go long. I was looking for us to trade or open higher, retest, and then look for that continuation to the upside, whether it be this high, this high, this high, this high, or previous daily high. This is where I was framing my longs. Now, let's drop down to the 1 minute. Here on the 1 minute, we're waiting for that candle closure at 9:15 for the new 15-minute candle. Here we have the new 15-minute candle right here. We're going to extend this to the right as well. Okay. So here you can see we open up higher above these two down close candles, validating the change in state of delivery. So we have this OB that we're working with. Let's skip a few candles. Here we're retracing lower. Then we're seeing that displacement. We see a rundown of sell side, another rundown of sell side, and this is where I frame my longs for today. So we swept these lows. Then we had that change in state right here. And I'm pretty confident there was S&T down at the lows. We took this low at 856. And Q was just stronger right here. So there was SMT. So we had divergence, a sweep of the low, change in state, all within this 15-minute OB, all within the 4-hour gap that we were working with, which was this one right here. So this is where I framed my entry for longs. Stop loss was at the swing low of my SMT, and target was these highs above here. As you can see, after I got in, price then stopped me out. Now, this is where it's important. This is where the true testament of a trader shows, right? You get stopped out, right? What did I do once I got stopped out? After I got stopped out, I stepped back, I reevaluated the market. I dropped my ego. I was looking to see whether I was wrong or not on the market direction, which is why after I took the loss, I cleared my chart, I dropped down to the monthly, and redid my top-down analysis. So I reevaluated what was going on in the market to see whether or not I was right on the direction or not. If I was wrong on the direction, I had to eat the loss. Am I going to get in right back again? No, I'm not doing that, because I'm more of a one trade a day type of person. But if I'm wrong on the narrative and direction, I'll allow myself one more bullet. So dropping down to the monthly, now the weekly. What do we have on the weekly? Yesterday I talked about this gap right here. This is my overall higher time frame draw liquidity. I was going against it, right? Going long. So that right there slimmed down the chances of the probability playing out for longs. We have this gap, right? We're gonna mark it out. Weekly rally gap. So we have this gap right here. Now let's go to the daily. On the daily time frame, we still have not taken the previous daily high or the previous daily low. We have the previous daily low down here, right? Let's drop down to the 4-hour. This is where I started framing my narrative for shorts. So I talked about this dealing range, how price came down lower into this gap, and we were seeing that reaction away from it, right? Now, if we deliver down to discount, our new dealing range would be right here, because we efficiently delivered down to discount into the gap. Now, after we retrace down lower, we're going higher into a premium. Now, when we look at this dealing range, focus on the red zone. Is there any PDAs above? I see this one right here, this OB. This is where I frame my short from, this OB in premium. What is the aligned time frame for the 4-hour? It's the 15. Now let's drop down to the 15 and let's extend this out. Dropping down to the 15, do we get a 15-minute change in state? Yes, we have these 3 up close candles. This is our change in state delivery to the downside. Do we get a sweep of the highs? Yes, right here. Do we get SMT? I'm confident that there's SMT as well up here at the highs. And Q took out this high right here. Wow, ES didn't. So this was our SMT. Right here. So not only do we get SMT, so divergence with ES at the highs at a premium, inside this 4-hour OB, we get that 15-minute confirmation of a potential 15-minute market maker or sell model. This is where I started framing my shorts, right? So price invalidated my idea for longs. I waited, saw what 930 did. 930 manipulated inside this OB. Right here. Open, wick, sell off lower. Now, what I was waiting for was a retest of this up close candle right here. This one right here. I was waiting for the next 15-minute candle to open, trade higher into it, and then look for a short down lower. So let's wait for the 945 candle, right? Let's drop down to the lower time frame. So we're going to wait for 945 to open. It's the next 1-minute candle. Here's 945. We're waiting. We're being patient here. If price doesn't retest this and goes lower, we don't take a trade and we're hands off for the day. That was what my thought process was while I was waiting for this setup. So we're waiting here. We're being patient. You can see how price wicks all the way down. Does not take this low, right? We then trade higher. We eventually tap into the key level. Here is where I pay attention to these two up close candles. I want to see if price can get down lower before we look for shorts. Price sweeps this high. We sweep the high once more. You have this up close candle that swept this high. This is the change in state up here. But I didn't want to get in a market or a limit up here. It wasn't enough confirmation for me. Did we get SMTs at these highs? Yes, we had SMT up here. So not only did we trade into that 15-minute key level, we had SMT and we had 1-minute confirmation. But I didn't frame my entry from this 1-minute CISD. I framed it from this inversion right here. This gap here that got invalidated and now used as resistance. So this was our inversion right here. So this is the PDA or the entry where I frame my shorts from. So here is where I went market. Entry was the closure below. Stop loss was the SMT swing high. This is our true invalidation point in which price should not return back into if we're bearish. Target was a 1 and 2. Right down here. And then you can see the sell-off. And eventually goes lower. Boom. So this is how we framed the trade we took. This is how we framed the trade we took. We got in at the inversion and then wrote it down until we hit a 2R. Going with the narrative of an internal to external from this 4-hour PTA at a premium. That's how I combine time frame alignment, stacking confluences, going from the higher time frame, the very top, working my way down lower until I find a setup. And if I don't have a setup, I'm hands off. So this is how I basically go about my mornings on a daily basis. And I think I posted it on Twitter here as well. AM session shorts. We had that weekly gap right here. Retracement higher into a premium S&T 4-hour OB. And we had that 15-minute confirmation as well as our 15-minute key level. You can also see how -2, -2.5 align with previous day low. So this was our first trade, our first long that we had as a loser. And then we took the short down here after realizing that we were wrong on the market conditions or the market direction. So this was the long. That was the entry for the longs, stopped out. And yeah, 1 out of 2 today. Hope this explanation helps you understand how I frame my trades, and I hope you have a good day. Be safe, and I'll see you guys in the next video.